Hey guys, AKIL'S here. Today we're going to talk about 2 scenarios to avoid if you want to stay out of trading trouble. More specifically, this video is going to talk about target placement and stop placement practices and give you some ideas on how you can maximize your profit. Now, this video is going to serve a purpose no matter what trading level you're at, because especially with newer traders, I find that we tend to believe the first thing we see, meaning we don't go on the journey of exploration and trying different things. We find something, we assume it works, and that's the only kind of idea we have until we learn the hard way and start discovering new things. So I want you to give this video a watch, and it doesn't mean you need to follow this method, but just think about it and compare it to maybe other types of methods that you're trying out. That way, when you do get to the point in your trading where you're doing more work on target placements, stop placements, at least you have 2 different ideas to compare and contrast, and that way you can make the best decision for yourself. As always, don't forget to like, subscribe if you're new. All right, let's hop in. So I got a question this morning. The question said, "Hey Akil, just a random question of mine. Do you prefer to trade a simple 1-to-1 or 2-to-1 risk-reward ratio, or does it totally depend on strategy you plan to use situationally? Kind regards." And my answer is neither. So I am not a believer in the set risk-reward ratio. Now let me clarify that first. If I had a strategy where it was a mechanical strategy, or I guess any type of strategy, usually I do this more with mechanical strategies, like a system, like an indicator-based one, or something systematic, like a daily chore, for example. Now, if I had a strategy where the rules were I always take a 2-to-1 or a 1 point whatever to 1 or whatever it may be, right? Then that's fine because it's specific to the strategy. But in general, in my price action trading, I don't prefer to look for simply a 1-to-1 or a 2-to-1. Now I have a 1-to-1 minimum requirement, but I'm not looking for those ratios. Who can tell me why? Why do you think that is? And again, I'm not saying this is a bad thing. Like again, daily chore was a great example of like, hey, nice and simple. Look for this, have this type of risk reward, just play the numbers game. But why do you think I just don't set up a kind of a consistent 1-to-1 or 2-to-1 with my trading? Why would that be? Price might not get to your 1-to-1 if it's in the way. So yeah, so the main thing I want to ask is, so what does a 1-to-1 mean? And probably the better question is, and this is the question I always ask whenever taking any trade, why am I taking a 1-to-1? So what is the reason for me taking a 1-to-1 or a 2-to-1? Why? Aside from it sounds good. Right? And the question we want to ask ourselves when we're thinking about this, right, is I know the objective of it is to put ourselves, or feel like we're putting ourselves in the best trading scenario, where it's like, okay, I know my numbers, I know that I have a win percentage of 70%. If I take a 1-to-1 on every trade and my trading strategy has a 70% hit rate, then I'm going to be profitable, right? We've all seen the graph. I will find it somewhere if you haven't seen it already. I'll find it while I'm filibustering. But like same thing with 2-to-1, right? Where I know if I have a 50% risk reward ratio and or a 50% win rate, and I have a 2-to-1 risk reward, then I know that as long as I consistently take the trades that I'm supposed to take, then I'm going to be in profit, right? How'd I do? Here's the graph, finally, right? The whole graph, right? 1-to-1, I know that if I'm above 50%, I make profit. The higher I'm above 50% win rate, the more profit I make. 2-to-1, I know that as long as I'm above 33%, I'll make profit, right? So I get that. But the question that we want to ask ourselves is, am I leaving profit on the table? Right? Because it's one thing, and I get a lot of new traders the goal, and this should be the goal because most new traders go broke and float off into space. Sandra Bullock style again. I'm a lot of Sandra Bullock today, right? The first goal of a newer trader is to not go broke. So the main goal is like, give me something that makes profit. And I ain't mad at you, to quote the great Tupac. I ain't mad at you, right? I'm not mad at you for that. But should the goal be just to make profit, or should it be to make as much profit as possible per what our system allows? And the answer is the latter. We should want to maximize our trading opportunities. So here's what I mean on a chart, right? Let's take a look at it. And I'm gonna, gold is man, I wish we had a better example here. So let's say I'm looking for a short opportunity here on gold, right? I don't know if this thing's gonna get sucked up. We got 2 minutes left, but let's assume we just broke and closed below that level of structure. So I'm looking for shorts, right? I'm looking for a pullback. Maybe we'll go down to a 5 minute here. Give a better answer. Yeah. So I'm looking for a pullback trade into this zone right here. And then I'm looking to get short, right? So let's say I get my pullback trade, I get my lower low, lower close right at this white line. Now let's go through the first scenario where, let's just say I'm using a 1-to-1. So now the next question is, so how do I base my 1-to-1 risk reward? How do I decide what I'm going 1-to-1 off of? Am I basing my 1-to-1 off of my target, meaning I'm projecting my target first, and then I'm putting my stop loss 1-to-1? Or am I putting my stop loss 1-to-1 and putting my target first? Right? Well, let's take a look at that, right? So let's look at targets being this structure shelf down here. And this is going to be a very extreme example, but it's going to get the point across. So let's look at my targets being that previous level of structure, right? Does that level make sense, guys? Previous structure shelf right here. Boom. Go down to that level. Yep. Good. All right. So let's look at this 1-to-1 deal. So I'm doing my targets first. This is the target first scenario. Entry is right there. My target is right here, right? So my rules say I have to have 1-to-1. That's what I do. So, all right, so let's make this stop loss all the way up here. All right, boom, got my 1-to-1. Now the question is, does my stop need to be up? Is that a good place for my stop loss? What would you guys think? If you were looking at this trade, would your stop loss be there? No, too close, too far, too high, right? What is the general rule for our stop loss? Our stop losses should be blank. Where should our stop losses be? General rule, not even I see based on ATR, but and that's could be a general rule for some. That's my personal rule, but in general, like just theory wise, philosophically, I'm looking for more philosophical, nothing specific, nothing technical. Yes, our stop loss should be in a place where we know we're wrong. So where is the point in the market that tells us, hey, dummy, your analysis is wrong. Get out, right? That should be where our stop loss is. Does that make sense? And that can mean different things for different people. It could be structure, it could be candlesticks, could be, even handle numbers. But in general, our stop loss should be at the place that we know we're wrong, because we want to be out of a trade at the soonest possible moment of being wrong, right? We don't want to be too close, right? Because we want to give ourselves room to be wrong. But wherever the market tells us that we're wrong, we should want to be out. We cut our losses short, right? Trading 101. Let winners win, cut losses early. Early meaning like not early breaking your rules, but early in the process. So if we base our stop loss off of 1-to-1 and we're doing target first, right? I'm going to write this in somewhere. Target first, we end up with a stop loss that is way too far. All right, let's do the opposite version. All right, let's do our stop loss first, right? So stop loss is say right above structure, right? Is this cool? Right above, we'll get a little bit higher over these structure highs. I think this is a fair stop loss. Maybe a little bit big for some of you guys, but a fair stop loss right above this previous level structure. All right. And let's match our target to our stop loss. Well, what's the problem you see here? This would be stop first. Well, now, if I believe in my analysis, and belief is based on analysis, right? If I believe that price is likely to go to this white line, and I'm taking targets off here, then as Vincent said, I'm missing out on profit, right? I'm leaving money on the table. There's more to be had in this trade than what I'm taking. So why am I limiting myself? So in situation one, why am I giving myself a bigger risk, an unnecessary risk, I would say? In situation two, excuse me for my phone going off, I'm too popular. In situation two, why am I limiting my potential reward? So this is always the problem that I've had with the set. Every trade is 1-to-1. Every trade is 2-to-1. No matter how you do it, you're leaving something on the table or putting too much on the table, I guess, in the way of stop loss. Does that make sense though, guys? In either way, I'm limiting myself. So my belief, again, unless you have a strategy that has this specific rules, and I've created strategies like that have these rules, where they're more mechanical, especially if you're building something system-based where it's going to be automated and you need something very, very black or white, then yes, a perfect get in, get out, right? You program it to, to do your risk reward. It's going to be very hard to program a system off of a discretionary strategy, right? Your system isn't going to be able to identify structure unless you use like, zigzag or swing indicators, stuff like that. But when it comes to discretionary trading, when it comes to price action trading, my belief system says this: I want to put my stop loss at the place where I know I'm most likely going to be wrong. I want to put my target at the place where I'm most likely to be right. And whatever that gives me on the trade, it gives me on the trade. Now, I do have minimums. I do think you should have minimums where it's like, hey, if I can't get at least a 1-to-1, I can't take the trade. Or if I can't at least get a 1.5-to-1, I can't take the trade. Or 2-to-1, I can't take the trade, right? Whatever your minimums are, it doesn't matter. That's up to you. So you want to, that's part of the process where it's like, hey, entry, stops, and targets. How does my risk reward look? Meets the minimum, thumbs up. Doesn't meet the minimum, thumbs down. I believe you should have those in place. But different trading opportunities are going to offer different opportunities. And why would I want to shortchange myself? Right? Specifically, if we're talking about like home run trades, right? Every once in a while we get those big home run trades where it's like, man, this one's got like an 8-to-1, guys. Imagine if you just took a 2-to-1 and you had to watch the other 6 go in your favor and you sat on your butt and you're like, why did I thought it was going to go there. I predicted it was going to go there. Why did I take profits out where I did? What's the answer to that? So that's always been my belief, is take what the market provides. You take what the market makes available. No less, no more. Whatever the market says you can have, that's what you look to take. Does that make sense, guys? Now, again, I understand, just like we spoke about earlier with too far left, too far right, right in the middle, with drawing out the ebbs and flows of I see nothing, I see everything, and then finally seeing it the way you should see it. I do understand from a newer trader perspective, the main goal is to make some type of money, right? You're coming into this thing where it's like, look, I've been losing for a long, long time, and I just got to make something. So I'm okay if your first, your first strategy, your first back test is like, hey, I want to keep it as simple as possible. I don't trust myself to see the full moves. And then you evolve from that. The next addition to your trading, right? We did some podcast episodes about that where we're talking about adding and making adjustments and observations. Maybe the next kind of version, next update of your trading adds something different. But I would also say one more scenario that can get you in trouble too. We talked about undershooting targets. What if you overshoot targets, right? So what if and I'm going to make this work somehow. What if your 1-to-1 was somehow, let's do this. Let's say you only projected price to go here, right? A retest of the lows. But let's say your 1-to-1 put your target here. Now you have a target level that is below 1, an important level of structure, 2, an area in which you don't expect price to go lower than. So now what happens in this scenario? What do? In order for you to make money off the trade, price has to go to a point that you don't actually think it will reach. Does that make any sense? I was going to say that's like me betting on Everton to win games, but 2 victories in a row, baby. Woo-hoo. Watch out, Spurs. We're coming for you.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on. This is